Hello everyone, welcome to my channel. I am Ketan Agarwal. Today after almost 2 years I am uploading a video as I got busy with my business. So this time I have come up with a video series where we will be learning about saving, investment and insurance in complete details. In this video we are going to deal with basics of saving, investment and insurance where you will be able to understand the basic differences and their role. So let's start. So let's see in short what is saving, investment and insurance. Starting with saving. It is the process of securing money, meaning you pull out a sum of money from your income and keep it aside in a saving account, a recurring account or a bank FD and you don't spend it immediately. Rather, save it for future use. It can be anything like unexpected expenditure in case of medical emergency or some planned expenditure like higher education of children or marriage, or maybe buying some assets like gold, land or building, etc. Next is investment. Investment is the process where your money starts working for you. In this process, your money starts generating income for you. So here we invest our money in products like gold, real estate or stocks, which has some degree of risk but gives us higher return than a saving bank account or a bank FD. Next is insurance. It is a protection against uncertainty and is a process of securing your saving and investment. Our life is full of uncertain events like it can be a medical emergency or an accident or maybe a damage to our property or it can be a death of a key person in the family. So, insurance is a product which helps us to restore our life by providing us financial assistance. He is Karan. He is very fond of traveling. Every 2-3 months he goes for a luxury trip. He also loves to keep a collection of latest gadgets like mobile, tablet, PlayStation and things like that. He even bought a sports bike at very young age. So last year what happened? Because of COVID he lost his job and now he is staying with his parents and take money from them to meet his liabilities because he never saved or made any investment from his income. He is Mr. Abhinav. He also likes to travel but he doesn't spend much. He prefers budget trip. He even doesn't spend much on shopping and only spends on necessary items. His favorite pastime is reading books and online courses because he believes in acquiring new skills and keep himself updated. He had made certain investment in the stock market from his income but did not save anything. Last year stock market fell due to COVID and at that time he also lost his job. So he ended up selling all his investment at a loss to meet his monthly expenses. So from the last story we learned that the first thing we should do from our income is start saving. Saving is going to be our lifesaver in case of any uncertainty. So what is saving? It is the money you put aside for your future use rather than spending it immediately. Saving can be used for anything like for planned purchases such as house, land, education, etc. Or it can be used in case of emergencies like medical emergency or job loss. So now let us see why saving is important. Saving is extremely important because it provides long-term security. When you have ample cash available with you, you face any hurdle in life with confidence and will be able to solve it immediately. Savings can also be used in case of emergencies. When you have savings available, you will be able to act fast and on time in case of emergencies. Saving can also be a good medicine to reduce our stress. When you have long-term security and have funds available to deal with emergencies, then obviously your life will be stress-free. Apart from emergencies and security, saving can also be used for certain big expenditure in the future, such as buying a house, land or gold, or maybe higher education of children. Saving can also be used to pursue your dream, such as starting your own business. When you save, then only you will be able to invest it in your business. He is Mr. Sharma. He has two sons, Mr. Karan and Mr. Abhinav. He gave rupees 10 lakh to each of his sons and said, who earns more money in the next 20 years will be rewarded. Karan, who is fond of playing sports, opened a sports store. From the store, he started earning rupees 1 lakh per month. Out of 1 lakh, he used to spend 50,000 on the basic necessities and 50,000 he used to save. So in 20 years, he saved total of 1.2 crores. From the bank, he used to get 8% interest on the recurring deposit. So after 20 years, he made total of 2.9 crore rupees. On the other hand, Abhinav, who loves reading book, opened a bookstore. From the store, he started earning rupees 75,000 every month. Out of 75,000, 50,000 he used to spend on the basic necessities. From the remaining 25,000, 15,000 every month, he used to invest on a mutual fund which gave him 18% CAGR return. Balance 10,000 he saved on a saving account where he used to get 8% interest on a recurring deposit. So after 20 years, he made total of 4.05 crore, which was higher than Karan. So obviously, Abhinav was a clear winner. So in the previous story, we saw that how Abhinav made more money than Karan despite earning less from him just by simply making investment. So what is investment? It is the process of acquiring an asset whose value is expected to appreciate in the future or can generate a regular income. Asset can be anything like buying a land or building, acquiring agricultural land, investing in stock market, or acquiring higher degree which can upgrade our career options. This is today's third story. Suppose this is you and you work for Infosys. So basically you are providing your service to Infosys and in return Infosys is paying you salary of rupees 1 lakh per month. Now suppose this is you and you have a technique to make a copy of yourself. You make your first copy and this is your second copy. Now suppose you work for Infosys, your first copy works for HDFC Bank and your second copy works for Maruti Suzuki or any other company for that matter. Now suppose you make rupees 1 lakh per month, your first copy also makes rupees 1 lakh and your second copy also makes rupees 1 lakh. So total you can make 3 lakh per month. But doing this is next to impossible. But what is possible is that suppose this is you work for Infosys and your money can work for you in companies like HDFC Bank or Maruti Suzuki. So you earn rupees 1 lakh by working for Infosys. Out of that 1 lakh, you can invest some money in companies like HDFC Bank or Maruti Suzuki or any other company. So your invested money cannot give you same return of 1 lakh, but it can give you return of 18 to 20% per annum. Doing this is 100% possible. So now we will try to understand why investment is so crucial. First of all, it gives us higher rate of return than a saving. Suppose if you put rupees 10 in a bank account or FD account, it becomes rupees 20 in next 10 years. But the same rupees 10 can become rupees 50 or close to 50 in case of investment. There is no guarantee, but it is quite possible by doing proper investment. Second, investment help us to beat inflation. You must be aware that things around us becomes costly year after year. Like rent increases by 5 to 10% every year. So only if we invest, then the value of our money will also increase so that we will be able to beat inflation. Taxes. Investment is one of the best tools available for tax saving. People can take advantage of ATC under IT Act by investing in mutual fund ELSS scheme or by buying an insurance. Retirement. Only by investing in assets like gold, property, and CS, people will have a regular income or a corpus of fund after retirement. So this will help us to live peaceful life post-retirement. Investment also help us to accumulate wealth or helps us to reach our financial goal faster and at less cost. It can be anything like having a sum of cash balance, higher education, buying an expensive car, buying property, or even going for a world tour. You must have heard high risk and high return. So in order to get higher return, we must take a bit of risk. There is no investment without an element of risk. Risk is basically losing the original investment or getting a lower return than the expected return. Risk arises due to crisis. During crisis, stock markets tend to fall, value of property also falls, as purchasing power in general falls, as it happened during 2008 financial crisis, during demonetization, and recently during COVID-19. Bankrupt. Sometimes it may happen that you have invested in a company and the company becomes bankrupt, as it happened in case of Kingfisher Airlines. It is quite possible that your value of property falls due to poor demand, as we can now see in case of COVID-19, because right now people do not have purchasing power. Many of them have lost their job. Businesses are not doing good in general. People are not investing much on the things like property, and so the value of the property has now fallen. Job loss. Despite having a degree from a decent university and having 5 to 10 years of work experience, it is very much possible to lose your job when the company is unable to perform well or in case of crisis. As again, this has happened all during COVID-19. Here's Mr. Joy. One day, unfortunately, he met with an accident. He got hospitalized and lost all his life savings and investment in order to restore himself, and he ended up becoming Mr. Sad. So in the previous story, we saw how Mr. Joy lost all his life saving and investment in just one shot, as he did not have any insurance cover. So what is an insurance? It is a contract between the individual and an insurance company where the individual receives financial protection or reimbursements against losses, and in return the company charges a yearly premium. So an individual can take insurance against his health, like if an individual gets hospitalized, then the hospital bill will be paid by his insurance company. In case of road accident, all the expenses will be borne by the insurance company that is required to restore the vehicle. Property. Insurance can also be taken against our property. There is always risk of fire or any other sort of risk. So in case of any loss, all the expenses will be borne by your insurance company. So let us see why insurance is important. First of all, insurance protects our family against all sort of uncertainty like medical emergencies, loss of property, or death of key earning person in the family. Insurance helps us to maintain same level of life despite the loss. Once life is secured against uncertainty, you can live a stress-free life as your life is secured now. So basically, whichever insurance you buy, indirectly it is a protection against loss of your saving and investment. As insurance company will take care of your loss, you don't have to use your saving and investment to restore yourself. So there are various kinds of insurance, like health insurance, which is a protection against your health. Life insurance, it provides protection against death. Normally key earning person in the family buys such insurance. Vehicle insurance, it is a protection against your vehicle. Shop insurance, travel insurance. Here the company provides protection against loss of luggage, passport, as well as medical emergencies in the foreign land. Property insurance, or even COVID-19 insurance. So in this video we saw what is saving, investment and insurance. What are their importance and how they are different from each other. Each product has its own importance which cannot be replaced. Sometimes you may have extra cash and may end up buying any of the financial products without informed decision. This video will help you to choose the right product, and you will be able to diversify your fund in all three products, that is saving, investment and insurance. So our video ends here. Thank you very much for watching this video, and please click on the bell icon to receive regular updates.